Hey everybody, Real Estate Ninja here. I hope you're doing well. I have two stories for you today. One, it's about the S&P 500 versus the banking stocks, the value of the banks. The next one is about the Fed, and it literally has no plan. And I think they're very important to go over because we are in this time of almost this irrational exuberance. There's like this hopium that's being tossed around the markets. The oil has come down a little bit. The bond yield has come down a little bit. And I think coming into Black Friday, you're going to see a very mixed bag of emotions when it comes to investors and what is really happening, only to see what happens come beginning of January, and you're going to see it snap right back. All right, talking about Black Friday, I've got a Black Friday special coming up, but before that, it's only open to people that are a part of the real estate crash course. All right, so I'm going to put a handful of 80% off links down below. $199. I can guarantee you two things. Well, three things. This is a 14-day money back guarantee. Number two, I believe that you will $199, you will save 10 times that much, or you will make 100 times the cost of that course in your next real estate purchase. And number three, well, I had none of the three. Let's just go right to the notes. All right, they're sort of big stories, so you need big notes. All right, first story. We've got this out of, oh, where is this out of? Come on, Ninja, get it together. I don't know where it's out of. Oh, here we go. No. I'm not even gonna, whatever. It's entitled U.S. bank stocks sink to all-time lows against the S&P 500. It says U.S. bank stocks have fallen to an all-time low compared with the blue chip S&P 500 index as demand for big-name technology stocks and the fallout from the banking crisis in March deter investors. Let me point out a couple of quick things. The S&P 500 has been on a tear for so long, right? And that's what's reflected when everyone's looking at their 401ks, their TSPs, or whatever retirement system you got. You're looking at it, you're going, oh my gosh, I've got so much money. Well, guess what? In 2001, 2000, or the dot-com bubble, when it burst, it took the Dow from X, whatever it was, 12,000, brought it down to 6,000, dropped 50%. Then it rose back up to 14,000. And in 2008, around that time, it went from 14,000 to 6,700. Down 50%. What I'm telling you right now is people are watching all of the really cool stuff over here, and they're not watching bank stocks are imploding because the banking sector is imploding. When the banking sector implodes, they loan out less money, and that means everyone gets hammered, all right? And that leads to layoffs and all this kind of stuff. It's very easy to figure out. It says right here, the relative performance of the S&P 500 bank index compared to the broader benchmark is at its weakest since the bank-specific measure began in 1989. It's the weakest since 1989. Holy cow. This year, the industry impact of the failure of Silicon Valley Bank and other small lenders has more than offset any upside from the higher interest rates. It also shows how banks have failed to recover ground that was lost following the 2008 financial crisis. It's worse than then, but nobody's paying attention. Why would we? I mean, come on. What's on Netflix? Think about this. All right, it says so far this year, the S&P Banks Index is down about 12%, while the benchmark S&P 500 has risen more than 13%. An index of regional bank stocks has lost almost a quarter of its value. But who cares? Well, I do, and I think you do too. Let me know down below if you do, but I do. It's a big deal, and it's going to lead to the greatest crisis in recent financial history. And that's why I'm getting everyone ready for this real estate crash. You've got to start taking action now. There's things you could do literally right now. It's amazing. And then, oh, you're going to crush it if you choose to. I mean, all right, next story. This is out of Zero Hedge. Well, wait a minute. Hold on. There was one more other important part. Oh, it says here, rising interest rates are usually helpful to banks, allowing them to increase profits by widening the margin between what they charge for loans and their own borrowing costs. But the speed of the rate rises since early last year has so far done more damage to the bond yields on their balance sheet and than any benefit from higher lending income. Well, here's the thing. That story doesn't tell you the biggest part of the picture, and that is our currency's collapsing. I get it. The DXY, a measure of the dollar versus a bunch of other turds in the punch bowl. See, all the currencies are turds. We know that as inflation rises and things cost more paper fiat currency for each item, that the currency's failing. But the dollar is rising a little bit right now. So you see gold down, silver down, some other things down, oil's down, stuff like that. It's just a little blip in the chart that goes, brr, 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 brr. That's it. It's that simple. It's the best smelling turd in the punch bowl for right now. But really, is it? I don't think so. Let me know below. It says here, the Fed has no, this is out of Zero Hedge. Okay, let's just give credit where credit's due. The Fed, it's entitled, has no plan and is just hoping for the best. And that is the truth, because gosh darn, that darn bond market, that 10-year Treasury yield has just gotten way out of control. And it is completely diverged from what the Federal Reserve was wanting to do, was slowly bring it up. Now it's like, Fed, hold my rate and watch this. It is going to absolutely blow people's minds in the next 6 months where the 10-year is going to be and mortgage rates. Again, I'm here to sell you something. I'm selling you the best opportunity you've ever seen in your life. Nobody I know of is teaching about real estate cycles and how to take advantage of them. If you had that opportunity in 2006 like I did, I sold all my houses and I had money to go make money. And it was great. This one, way bigger of an opportunity. So if you want that opportunity, the links are down below. If you don't, it's okay. Renting can be fun. You don't have to mow your own lawn. All right, here we go. The Federal Reserve's Federal Open Market Committee last week left the target policy interest rate unchanged at 5.5%. This pause, oh, real quick, this is not the Economic Ninja channel. I know, I got it. I got the notes and all that stuff. It's like the Economic Ninja. It's a different channel, Real Estate Ninja. If you wouldn't mind subscribing. It's getting a little awkward over there. YouTube doesn't really want to do anything with that channel. This channel's been blowing up because of you. Thank you. Says here, this pause in the target rate suggests that the FOMC believes it has raised the target rate high enough to rein in price inflation, which has run well above the Fed's arbitrary 2% inflation target since mid-2021. I say believe, but perhaps the more appropriate word here is hope. That is, the Fed hopes it has raised target interest rates high enough. Moreover, the Fed hopes it will both rein in price inflation and also avoid raising unemployment too high. Let me ask you this. Can you guys do me a favor? Type down any time the Fed, just give it a year, has overshot the mark. You know, they go, we're going to go here, and all of a sudden reality goes, we're going to go way up here, or we're going to go down here. And reality's like, where'd it go? Truth is, every single time the Federal Reserve comes out and says they're going to do something, it's a plan, they screw it up. There's never been a time in history where they haven't. That's actually why. They really are trying to do this on purpose. I just wish people understood that. It says right here, after all, the Fed has no idea what the correct federal funds rate is to achieve the goals that the Fed has set for itself, nor does the Fed know what the neutral interest rate is at any given time. Even as Chairman Jerome Powell admitted at this month's press conference, you can't identify, this is a direct quote, you can't identify with any precision in real time, and we know that. Nonetheless, that was end quote. Nonetheless, we can see here that the target federal funds rate has been held steady by the FOMC since July of this year. Hey, it actually went up a little bit since then, but my point being is this. The Federal Reserve knows that it's got to give a good interest rate, and the bond market right now is a perfect example of that. Every time the government goes out and tries to raise money, they got to give sort of a good interest rate to China, Russia, Japan, Iran, all these all these countries that they want to sell their debt to. Here, can we just export our inflation to you? And they're like, nah, niet, whatever no is in other languages, because they don't want our crappy dollars. So the Fed knows this is endgame. This is it. I'm not joking. When I say this is the greatest opportunity of your life, I'm not joking. I know it sounds like I'm joking, but I'm not. How can I become more serious? I can't get all doom and gloom when it's like, we're going to crush it. I just want as many people to come with me to the party as I can get. It's as many people as we can get fit in the Pinto. Budget cuts are, anyway. Whether or not the Fed does that this time is not a sure thing. And it has become more increasingly obvious to the voting members of the FOMC, or that the voting members of the FOMC have no idea or are unwilling to reveal what they'll do next. Gone are the days when the Fed repeatedly suggests that it had a long-term plan or any sort of clear strategy for manipulating economic conditions. Over the past several months, Powell has made it increasingly clear in his post-FOMC press conferences that the Fed is, if we believe what they say, do you guys believe what they say? I actually do believe what they say. I have a feeling it's going to get to it right here. In its press conferences that the Fed is, if we believe what they say, playing it all by ear on a meeting-to-meeting basis. Its strategy consists of tinkering with its monetary policy and then crossing its fingers. Nope, that's not what I was expecting it to say. I'm expecting it to say this. When the Fed says, and Jerome Powell has said it multiple times, we are going to stay higher, interest rates are going to stay higher for longer, that's not a joke. They want you unemployed. How do they do it? Maximum pain, you're fired. That's how, because companies are going to go, oh crap, we can't borrow money at good rates. We're not used to, we need more monetary heroin, which is lower rates and a lot of credit and not a lot of scrutiny on that credit. You know, the lenders, and then they just go, well, you're fired. That's what happens. This is the best newscast ever. There are reasons for this utter lack of precision in planning. Some are economic and others are political. What? Guys, ladies and gentlemen, I'd like to make this official announcement. In 2024, President Jeff Morgan will do everything in his power, along with his Democrat friends, and I get it, the Republicans are just as nasty. They are going to try and cause so much calamity that you are scared. Hopefully you're not prepared. I mean, I hope you're prepared, but they are hoping you're not prepared, so that you will vote economic prosperity and the destruction of our republic's gone, but of our democracy. That's what's going on. That's my official announcement. The first reason is that the Fed is terrible at forecasting. The FOMC members and chairman are constantly behind the curve when it comes to understanding trends in price, inflation, and economic growth. For example, Chairman Bernanke was still insisting there was no recession coming as late as mid-2008. Remember? I put that clip on before with Maria Bartiromo when she was working at CNBC. It's funny how people are like, she doesn't work at CNBC. Yeah, I know. I've been doing this for a long time. Shows my age. And he goes, I don't believe that there's a housing crisis coming. And it's impossible that it would happen all across the country at the same time. See, this is what's great. One day you're going to be able to say, when people are like, dude, how'd you know, man? How did you get their houses so cheap? How were you ready? How did you buy 20 houses when I couldn't even afford one? You're like, well, this dude with a really awesome haircut and some cardboard notes told me. And that's what I want my legacy to be. I want to see 1 million people make $1 million. And there's no other YouTube channel, well, except for the Economic Ninja channel, but YouTube has just spanked them, that's trying to get you to do this. I don't know what else to say. Other reasons for the Fed's evasiveness are political. Contrary to the long-standing myth of Fed independence and political neutrality, the Fed is a deeply political organization. It's also not a government organization, it's a private bank. So you need to know that. They won't teach you that in school. If you don't even get me started on the Wizard of Oz. The Fed allows price inflation to surge. This will undermine, or if they do, this will undermine the regime's credibility and damage the administration. No, it doesn't, because they were totally wrong and they planned 2008 and they're still in power. It's like the National Association of Realtors head, I am the head economist of the National Association of Realtors. There is no housing crash. It's not happening. He said the same thing in 2006, 2007, 2008. They called for him to resign and they tried to get him fired. And the NAR said, no way. He's the greatest cheerleader ever. He's either the dumbest dude, he's dumb as a box of rocks, or he's malicious as crap. But the point is he sells real estate. And that's what you got to understand, when to get in and when to get out. That's what I teach. Links down below. Don't know what to tell you. I am trying to sell you something. There should be zero question. Meanwhile, the regime wants the Fed to keep interest. Oh, and just, I'm not even going to lie. I'm going to increase the price by that course by 10x come January. And you'll just have to wait to find out. But I gave 1 year to try and get everybody in. Nobody had excuses. Do it. And then we're going to the people that take this stuff very, very serious. And I'm going to get really serious. But my courses are actually really serious. Man, this is an infomercial. Meanwhile, the regime wants the Fed to keep interest rates on government debt low so the costs of deficit spending don't get out of hand. That means pushing down the federal funds rate and other interest rates through its open market operations. Debt costs, unemployment, and price inflation are all political problems the Fed must manage at once. Boo-hoo. But the time horizon is strictly short-term. There's no long-term thinking here about building a sound economy, fostering investment, or helping the working man save for retirement. The Fed's concern is keeping up appearances. Here's the deal. They are hell-bent, and I'm not joking. This is a planned event. I know it sounds like a joke. I don't know how else to explain this to you. They know exactly what happens when they give out credit at low rates. This is exactly what happened after the Spanish and the subsequent, depression of 1920. Most people don't even know that existed. Then for the Roaring 20s, they did this all through the Roaring 20s. And then it got really bad. Irrational exuberance overtook the markets, the crash of 29, and the Great Depression. We all know. The Fed knows. The FOMC chairs know. They all get it. Look, I'm no one fancy. But I barely made it through high school, didn't finish college. I'm just a dude with a bro hawk and a dream. A dream of making you so freaking rich and taking back the wealth of our nation that was lost to a handful of little dweebs, beta males that just, geez-o. And they're running the world. And they planned this. And they've now pulled the rug out from under you. How do you like that? So I made my first million when I was in my mid-20s and became a accredited investor. I did it through real estate. Real estate's the easiest way to make money. And it's the easiest way to be patient, sit on the sidelines, then boom, jump in. But when it comes, and there's a time frame coming between 2024 and 2025 to jump in, I guarantee you when I say, okay, it's time, most people without the proper training are going to laugh, are going to be scared crapless. But there is a way, and it's a very short period of time. It usually lasts about 2 years maximum because of when the Fed starts to pivot their rates, where you're going to be able to pick up houses for zero down. You're going to need just a little bit of money off the side, a little bit. I'm talking nothing. Imagine 3% of $250,000. Just like to give you some ideas. And then every house after that, boom, free, 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 no money downs. You have about a two-year period. So you need to get ready now. Actionable steps. Are you going to choose to be ready? Or are you going to choose to be on the sidelines and watch all this happen? Look, I'm going to be honest with you. I want to be part of the coolest group in the nation, and that's going to be Ninja Nation. That's going to be prepared, not scared, and going to be buying houses. It's not time for one or two. It's time for 10, 20, 100. All right, with that being said, the Real Estate Ninja, and thank you so much for subscribing. You guys are awesome. This channel is blowing up, and it is the fastest growing channel on YouTube. Is out.